Oil prices have come back to $80 per barrel, which is quite strange considering the latest news from Europe. Let's try to figure it out. According to some Western media reports, Brussels is considering blocking Russian oil tankers that do not have Western insurance sailing though its waters under new European Union plans as a way of enforcing a $60 per barrel price cap on Moscow's crude. The European Union is considering this measure as a part of a new package of sanctions. Naturally, Russia is not interested in deals at such a significant discount, especially with unfriendly countries. Such a decision could paralyze the oil market, as Russia is the world's second-largest oil exporter, and this threatens energy shortages, at least in Europe, which in turn could lead to a steep rise in prices. Nevertheless, this is just a rumor and there is no panic among investors. The situation will probably become clear in the coming days. In the meantime, the market is moving in the opposite direction from expectations, so it's nothing more than speculation. Thus, Brent crude oil futures halted their partial recovery at around $84 per barrel. As a result, the volume of short positions increased, dragging the quote down to the 80 mark. The benchmark will extend weakness if the quote fixes below 79.5. In a bull case scenario, the level of 80 can be seen as support. Meanwhile, gold stayed at above $1,960 per ounce. It's a rally stealth, largely due to a looming rebound in the currency market. Moreover, macroeconomic statistics once again point to the dollar's renewed strength. Data released on Wednesday showed that the US retail sales fell less than expected in October, confirming the country's economic resilience and allowing the central bank to keep interest rates higher for longer. If the corrective rebound turns into a new round of the US dollar appreciation, gold may well dip below $1,950 per ounce. Against the ruble, however, the dollar found no reason to resume gains. The dollar exchange rate fell below 90 rubles for the first time since July, weighed down by rumors about the next package of sanctions from the European Union if Brussels blocks tankers carrying Russian oil above a set price. The energy market will be paralyzed for a while, and Russia will face a temporary decline in export revenues as it will need the time to adapt to new realities and find new trade routes. Given that export revenues make up a great portion of the country's budget, the ruble will most likely come under pressure. However, as is the case with the oil, this is probably just a speculative move, which aims to maximize potential profits while moving in the opposite direction. And that's all for now. We continue to follow developments in the financial markets. Subscribe to our channel and follow the news with us. And see you soon!